Hi, this is Greg Bridges with Trading the Pips. So today we're going to be going over an update with the NZDJPY currency. So what's going on with the NZDJPY? Right now, the Japanese yen is at an all-time high, at least for the past couple of years, last 3 to 4 years. We're looking at all-time highs, and at the same time, we've seen some all-time lows for the currency as well. So what does that mean for the NZD? If the Japanese yen is at an all-time high, that means that the NZD is at an all-time low. So once again, we look right here on the chart. This is a weekly chart. We see that in 2016 we have a wick that's pretty much drops us down into the 6.9 range. I want to say the 6.92, 6.93 range, as you can tell. And then if you go right back here in 2019, we see that actually that could actually be considered 2019, 2018, and we saw a drop down to the 6.9545 range. And as you can tell, we kind of rose back up into the 7.6 before descending downward, and then you see a gap that happened pretty much over a weekend time frame, and the pair just continued to descend down. So the NZD is at a low time frame. Now, the good thing is anybody that decided to take a buy at this 7.0 range, or 7.1 range is currently in the positive, because this thing hit that low and it hasn't really made it back down to the low, but maybe once or twice. So if you did catch it at 7.0 at any point, you're definitely positive right now. I want to say maybe close to a little bit about 120 pips or so, maybe more. But as you can tell, we have a support/resistance line drawn. So the support resistance line is drawn at 72501. So pretty much what we're saying is that once the NZD/JPY gets up to that level, it could possibly hit a resistance and slow down in terms of its upward momentum and possibly started trending downwards once again. At some point, we do believe it's going to break through that 725 line, and it's going to hold as a support, and we're going to see it rise on up. We'll see it go right past where it once had this gap area, and we think that it's going to continue to go up forward, and we'll see somewhere around that 7576 area. Once again, this is another resistance zone, and we think that it's going to fluctuate a lot around there. Now, I can tell you that right now I have trades in at around 7.24 area, so I'm currently in the negative for probably about $100 or so. I got in on this trade kind of late, but it's all good. I'm in for about 30,000 lots. So once we do cash out or take our profit, we're going to be somewhere around the $900 to $1,000 range. So how long do I think that this currency pair is going to stay down in its lows? So once again, if we go back by the historical data, we see that anywhere from the June time frame to the October, November time frame is when it crossed over up around this range and started making its way to the higher prices. And it actually just shot all the way up into the 8s, 8.2, 8.3 range, so 83 range, I'm sorry. We're not looking for it to go that high. Does it have the possibility of going that high? Yes, I believe it does. But am I looking for it to go that high? No, I'm not. I'm looking for it to hit back in that 7.6, 7.5 range. That's where I'm going to be taking my profits. But if you look at it from anywhere from that June time frame, so say June, July, August, September, October, going into November, so we're talking about 5 months that it took the last time it was this low before it made its way back up into the 7.6s and went above that. Now, as you can tell, there are some wicks all around this area. So In a matter of let's say a month or two, we should start seeing these crazy wicks happen, possibly for the currency pair. Right now, it's not really volatile. It's just down really low. But it's a possibility with the trade war with China and Japan and with that the U.S. has going on that we'll start seeing some type of wicks pop up. It's a possibility that we'll catch one of these wicks and it'll take us out of our trade right around that 7.5 range. So that's what we're looking for. So maybe in a matter of 2 months or 3 months, we'll see some type of volatile actions going on, and possibility of taking us out of our trade is very high. And so that's what we're looking for. So maybe in 2 or 3 months, you'll be able to take some profit. But if not, I would tell you to hold on for that 4 or 5 month time frame just to see exactly what's going on with the currency pair, and so that give it time to make its way on up through the resistance area of 725 on into its 7.3s and the 7.4s, and going into that 7.5s and getting close to that 7.6 area. I would tell you to definitely take profit before 7.6 because you have the tendency to possibly hit a resistance and go back downward. So hopefully this has been beneficial to you guys. My name is Greg Bridges, trading the pips. And I guess I'll tell you guys to have a great Sunday and enjoy the rest of your day. Bye.